Two psychologists, Sheena Iyengar and Mark Lepper, they decided to conduct a strange experiment in a US supermarket.
What happens when you give people so much choice?
Customers were given a chance to taste and buy bottles of jam. Half the time of the experiment, they kept 6 jams to choose from, and the other half they kept 24. Ideally, when there are more options, the consumer should be able to find a jam that matches their taste, and that should lead to a purchase. But the opposite was found to be true. After the customers presented with 24 options, only 3% bought the jam, and the group presented with fewer options, 30% of them ended up taking one home. Sometimes when it comes to choices, less is more. And this analogy is totally applicable to investing in stock market. There are around 4,000 public traded companies, and that's just in US. And for someone who is starting the investment journey, picking a few from them could be a bit overwhelming. Therefore, even if you have the money, the chance of getting stuck in this decision paralysis mode and not investing is very high. And with the current inflation rates, every day you are not investing, you are literally losing money. We don't want that to happen, do we? So in this video, I'll give you some of the best performing low risk equities that you can buy and hold forever. This is not by any means a perfect list, but this is where I started with, and I believe this could be a good place for you to start as well. But always remember to take these recommendations as my personal opinion and do your research before you invest your money. Ideally, when it comes to the stock market, you have 3 options: stocks, ETFs and bonds. All you need to have is a portfolio that involves one of this, 2 of this, or all the 3 in some proportion. So let's start with the stocks first. There is no magic formula to find the next big stock. All you can do is make some calculated guesses. It would be a good strategy to stick to those with low volatility when you are especially in the beginner learning phase. That means the stock of those blue chip companies that don't fluctuate a lot. Of course, they won't be growing as fast as the more risky ones, but use this period to get yourself familiar with the stock market before jumping to take more risks. There are 2 classes of stocks, and which one you choose depends on your motive for investing. If you're not worried about immediate cash flow and are looking for long-term returns, an ideal option would be growth stocks. Growth stocks are stocks of those companies that invest a major part of the profits back into the company to grow more. So now let's see some of the popular growth stocks you can buy. The growth this company has achieved in the past is just extraordinary. Something that started as an online bookstore out of Bezos' garage is now sending people to space. Amazon not only dominates as an e-commerce leader, but has its foot in multiple sectors, from cloud services, online streaming, to even space exploration. It's challenging for others to compete with a company of this magnitude. So you can't go wrong by owning a stock of Amazon. Amazon stock is currently valued at around $2,900 and has a symbol AMZN. Originally called Face Mask, Facebook started as a small online community of Harvard students and then outgrew into 3.6 billion active customers. That is roughly half the world population. And now they are moving beyond social apps to build a digital universe that offers an interconnected set of experiences. Facebook has always had its share of controversies, but it hasn't stopped the company from growing to generate $117 billion in 2021. The stock is currently valued at $186 and can be found with the symbol FB. Tesla has always been a controversial stock, thanks to its owner Elon Musk. The value of the stock and the company depends totally on this man and what he does. Their vision is futuristic, and they have shown that they can deliver on their promises even if that happens a bit late. Tesla is a leading player in the EV market. They also manufacture and sell own battery systems and solar technology equipment, even flamethrowers. This is an investment you can make for the future. Not the flamethrower, I meant the stock. Do you wish you had invested in Apple when the company was just starting to become a global player? Now you can make that wish true with Tesla. Tesla in a lot of ways resembles Apple under Steve Jobs. And this is going to be a bumpy ride for sure, but this is one ride that could probably take your money to the moon. You can buy Tesla stock for around $830 under the symbol TSLA. This is one company that can entertain you and make you a lot of money. And like many other companies, the last 2 years were a difficult time for Disney. The pandemic had a drastic hit on Disney's revenues from the theme parks and cinema. Disney stock fell by more than 40% during this period. But I guess the worst is over. The theme parks are getting busy again and people are back in cinemas. The company and its characters are loved by a lot, which will ensure that it has a future. And Disney is not just about theme parks and animations. They also own ESPN, ABC and Marvel Studios. They are going to celebrate the 100th anniversary in 2023, and there aren't many companies that get to celebrate one. But what if you're not looking for that long-term returns and you want a regular income from your investments? Then the best option would be to go for dividend stocks. Dividend stocks are stocks of those companies that pay regular dividends, either monthly, quarterly, or yearly. And there is no better option to start the list than with a company that has raised its dividends annually for the past 59 years. And that's the dividend king, Coca-Cola. This non-alcoholic beverage company has refreshed us for over a century now. Coca-Cola's dividend yield is 2.9%. Yield is the ratio of dividend paid by the company to its stock price. The company committed to this payout despite a poor performance during the pandemic, and that shows where its value lies. The revenue from international markets are growing steadily as the economies recover around the globe. This company is without a doubt a strong value addition for any portfolio with a long-term view. The stock is trading at around $60 under the symbol KO. You are not going to find many dividend stocks with more impressive credentials as Johnson&Johnson. They now stand as the largest healthcare company in the world. Johnson & Johnson's biggest strength is its diversified business model that provides stability in all kinds of economic cycles. It operates through three segments: consumer, pharmaceutical, and medical devices. They have a wide portfolio of drugs that treat everything from cancer to cardio diseases to immunology and infectious diseases such as COVID-19. And Johnson & Johnson is a dividend king with 59 consecutive years of dividend increase. Although the company is fighting some legal issues, they reported rising sales and net revenue in 2021. The yield is currently 2.5% and you can buy the stock under the symbol JNJ. J.P.Morgan is the oldest and storied name in the banking industry and is the biggest US bank by market value. Since the 2008 economic crisis, few bank stocks have performed more consistently than J.P.Morgan, thanks to its efficiency, rock-solid balance sheet, and revenue diversification. JPM offers a yield of 2.2%, which is above average, and this is a solid option for anyone who wants to invest in a low-risk and stable option in the financial industry. You may not have heard about this company directly, but you may know the powerful brands under its wing. Pampers diapers, Gillette razors, the list goes on. They are among the world's largest consumer product companies, and the products that this company makes will always be in demand, making the company kind of recession-proof. P&G has paid its shareholders a dividend since 1891. The current yield is around 3% and the ticker symbol is PG. 3M is a powerhouse of a company with a massive portfolio of products spread across sectors such as safety, industrial transportation, electronics, healthcare, and consumer. This is another company that makes everything under the sun. So by investing in this company, you're automatically diversifying across different product lines. The company has survived and thrived through a pandemic, the Great Recession, the dot-com bubble, the World War, and many similar downturns. Today, 3M is offering investors a 3.2% dividend yield. It has increased its annual dividend for the past 63 years and is one of the best income opportunities for a long-term investor. McDonald's is one of the most recognized brands worldwide and is one dividend stock that investors shouldn't overlook. This is a dividend aristocrat and has been increasing its dividend annually for the past 45 years. The company, with its presence in over 38,000 locations in over 100 countries, has strong fundamentals to withstand almost any downturn. They are also innovating by introducing plant-based burgers in the menu. This stock may not make you super rich, but it will deliver both income and growth in the long term. The yield is around 2.4% and the symbol to watch out for is MCD. If there is one stock that can represent the best of both the dividend and the growth world, that is Apple. The tech giant is both a dividend and a growth stock. They became the first company globally to reach a market capitalization of $3 trillion. That's more than the GDP of 186 countries, and only US, China, Japan, and Germany are ahead of it. The company that once went almost bankrupt made a tremendous comeback under Steve Jobs and is doing well under the leadership of CEO Tim Cook. Apple only pays a dividend of 0.5%, but considering how much the company has grown in the past years, this is one stock that you can't miss having in your portfolio. Apple stock is traded on the Nasdaq exchange under the ticker symbol AAPL and is currently around $160 per share. Even though the companies that I mentioned until now are very stable companies, owning individual stocks still carries some amount of risk. And for those who want to reduce that risk factor further, can look into ETFs and bonds. Again, I have done a detailed video on what ETFs are. You can check that out here. And when it comes to ETFs, you got similar options like stocks, but the terminology is a bit different. So dividend stock becomes distributing ETFs and growth stocks becomes accumulating ETFs. If you want to generate regular income from your portfolio, go for distributing ETFs. And if you want to maximize future returns, go for accumulating ETFs, since the profits are automatically reinvested back into the fund at no extra cost. If you ask me to recommend one investment, just one investment to hold forever, I would say go for S&P 500 ETF. If you want to have zero complications, very low maintenance effort, and still stay invested, just invest in this. The S&P 500 has been growing at an average rate of 7.5% in the last 20 years and is 99% sure that it will grow further in the long term. When you buy one unit of this ETF, you automatically diversify your portfolio across different sectors in the US economy. For sure, there will be some short-term fluctuations, but if you can handle that, then this is a sure, easy shot at growing your money. And most major stockbrokers have their own version of this S&P 500 ETF, but just don't bother that much. Opt for one which you have access to. If you want to dive a bit deeper into the ETFs, expand your portfolio by investing in an emerging market ETF that will give you a share of the emerging markets, or a global ETF such as iShares MCSI World ETF that invest in stocks with a focused world. You can also find ETFs related to any industry. If you think the aviation sector is making a comeback after the pandemic and you want to invest but you don't know any specific companies to invest in, you can just buy an aviation sector ETF that will give you an exposure to the whole market as such. But as I said earlier, if you invest in the S&P 500 or a global ETF, you are good to go. And finally, the option with least risk, the one that lets you sleep peacefully at night. Bonds. You may all have gone to a bank to take a credit. Bonds are similar to that, but in this case, you are the bank and you are lending money to companies and governments. The only thing you have to check is whether the person who takes the loan can pay it back with interest, and that's why the US Treasury bonds are of very high demand. These are the bonds issued by the US government and they have never defaulted on their debt. These are literally zero risk investments. Bonds pay you a fixed rate of interest that can provide a steady income stream. You can buy the US Treasury bonds directly from the website without a middleman. You can also invest in municipal bonds which are issued by local and the state governments, even though they are not as solid rock as the US Treasury bonds. You can also buy bonds from corporates and they tend to offer high interest rates. But companies are more likely to default than governments and carry more risk. Always check for the credit rating before you make a purchase. A better credit score means that there is a better chance of you getting your money back with interest. Bonds are an excellent way to stabilize your portfolio and protect yourself from market volatility. An easy way to consistently invest in stocks or ETFs is through a savings plan on Scalable Capital. This video is not sponsored by them, but from my personal experience, I would highly recommend their service. You can use the link in the description below to open an account directly. If you want to know how much money you should invest in each option, then you can check this video where I explain how to create a balanced portfolio based on your personal risk level. As a beginner, it's not necessary to take more risks and go for more profits. It's more important to start, have a feel of how everything works, make mistakes and then learn from them. Relax and enjoy the journey.